I just wanted to lighten the mood. I'm gonna change out of this really quick. Hold on a sec. Hold on. All right. That's more like it, baby. What is up, everybody? Welcome to Trey's Trades, where we freaking talk fast and don't skip class, baby. It is your boy Trey coming back. I like to, start off by saying that I'm not a financial advisor, not financial advice, obviously. So take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, we're going to be talking about ticker symbol AMC here and giving you the update on what's been crack-a-lacking, baby, on the Kraken. Releasing the Kraken eventually, the time will come, but today was obviously another red day. Down about 13.23% on the day, about $6.50. If you look at the daily, kind of technical analysis and what actually happened here, you had a pretty harsh sell-off, obviously. I would anticipate there was maybe some people who sold out of their positions, right? But mostly some short selling, right? Some short selling coming from these big hedge funds, the big firms, the big institutions, the people who are, essentially just betting against the AMC stock. There's a couple other things that I think are possible, and I'm going to get into this as we continue through the video. We're going to go over the ortex data. I want to give you the short volume percentage. I want to give you stocko tracker and talk about the importance of the call options that could potentially expire in the money, and finish this off with the technical analysis on the 1 month, hour-long candles and tell you kind of what's been coming up, because this is a move that I predicted would happen, right, yesterday in last night's video, and now we're just waiting for that follow-up to come, right? So let's just dig into this, not waste anybody's time. We'll leave you with some nice parting words at the end of this, and save as much time as we possibly can. So without further ado, we're going to start off here with ortex. Now, ortex gives you a T2 settlement period of time, right? So everything that you see here in terms of short interest change, returned shares, borrowed shares, the short interest change, the cost to borrow, the utilization, that's all lagging by, well, depending on the data, about 2 days. So all returned shares from shares on loan take 2 days to settle the liquidity and those shares that ended up getting returned. You won't actually know if it was shorts returning shares or forcible share recalls from the people who lent out stock, right? Now, it's already been disclosed by Ortex, which we briefly touched on here before, that the short interest is higher than they anticipated and could be high, in my opinion, could be higher than we even know, because Ortex gives you 85% of the exchange data, reported data, right? So what you see here is that as of 2 days ago, short interest went down about 3.91%. This could have very easily just been, as I mentioned before, shares getting forcibly recalled out of the stock. Now, if we look at this 2 days ago, just look at the overall price action, 1, 2, it was actually a red day. So how would this have negated essentially the cover effect if this is true, right? If the short interest went down? This brings me to my next point, which is it's very likely, and I honestly believe it, that possible, where you actually just had shares that were on loan that got recalled by the people who lent out the stock because you did not have that forced, kind of cover effect. Either that or it was negated by selling pressure. This could have come from big institutions who haven't filed the 13Fs, the 13 Foxtrots yet, stating that they filed some sort of transaction, completed a transaction. Could have come from the Apes, right? There's a couple different ways this can play out. I'm more inclined to believe that this is coming from a forced recall. People essentially saying, hey, we want this stock back. You shouldn't hold this anymore. There's too much risk on the table, right? So that's kind of what you got rocking right here. I think that you're going to see some numbers really shift around once you get a true picture of what's happening in terms of short interest. However, keep this in mind. There are unquantifiables, untangibles in this AMC equation that you as a holder have to be okay with. It's a financial responsibility, right? It's a decision that you have to make. Are you okay with the fact that you might not know some of this tangible information? The naked short selling, the failure to deliver, some of the algorithmic trading. There are things that we aren't going to be able to quantify for AMC stock. I've personally accepted that. I'm okay with that, but that's something that's going to rest your mind a lot easier if you're willing to accept, right? That's something that you need to weigh on the table as we're looking at AMC stock as a trade, right? Personally, for me, it's a story. It's a legacy. It's a book that's being written out before our very freaking eyes. And that, to me, is why I'm holding. I'm okay with the unquantifiables because I understand and believe in the apes and the cause and the message to the fucking Wall Street short sellers who try and piss on the little guy all the time. And I'm not looking away until this is all said and done. I still believe there's more on the table here. I'm going to show you some other stuff here in a little bit. Short volume percentage, we've got rocking 39% on June 9th as well as 42% on June 8th. Now, that means that out of all the volume on that given day, 9th and the 8th, that was about how much was shorted volume. Now, this might seem lower in comparison to what we've seen, but that's just because this was so astronomically high. Keep in mind that the fact that there are still shorts who are betting against the stock, even with the potential of a squeeze on the table, right? It's asinine. It makes absolutely no sense. It's not something that's a smart investment decision because the volatility on the stock and the way that this flips on a dime is so radical. You can't guess that sort of stuff sometimes. So for people to even still be betting against the stock is absurd to me. Now, look at stocko tracker, look at the total of shares available to borrow. You've got 1.9 million. And some people will ask, I see this all the time, this question asked, I'm going to make this super simple. simple. There's two ways that this can pan out and give you a different number. One of them is some shorts covered, which makes more shares available to borrow. A second one, which I think is more likely, is since there has been forced recalls on shares, right? Shares are being returned from being on loan, not shorted, but on loan. What could happen is there's just simply more shares available to borrow from lenders, right? It doesn't mean that all shorts have covered positions. It doesn't mean that they've been returned, necessarily that day. It could just simply mean that, hey, a lender says, okay, I see there's 100 million total shares available to borrow right now. I'm going to add 10 million to that total pie, which makes this equation, right? It adds to the total shares available to borrow. So that's what we're seeing right now. Currently, there's 60,000 call options expiring in the money on June 11th, and even more call options expiring in the money on June 18th, which is a critical, pivotal point that I think is massive. And we're gonna get into that as we continue on through the video. So why is this important? I want to kind of finish off with this. Call options expiring in the money gives the opportunity for exercising. And if market makers who write up these call options don't have the stock to exercise, right? What happens is failure to delivers. Now think of this as synthetic stock, which essentially has to get cracked down on at some point in time. Now this many eyes on AMC stock right now, especially the SEC, saying they're investigating these heavily shorted stocks that retail investors are playing right now, right? What would happen if they don't, deliver on the stock and they recognize that it is for a specific reason? Cracked. They get freaking slapped across the booty, baby. They get slapped on the ass. I'm not even gonna say the ass, just the ass, man. Just straight on the ass. And that's what we're hoping for, right? So that's what you got cooking up in terms of call options. And we'll get into the options chain as we come over to the chart. Now I wanna go over here to Ihor Dusanewski because this is a pretty fascinating thing that he's got rocking up right now. Even with AMC stock dipping the way that it is, right? He's got something pretty interesting that he's tweeted out, which I find to be fascinating. Now it's this, the short interest is currently $3.45 billion betting against AMC stock, 13.98% of free float. Now, this isn't a huge difference from what we see on Ortex as it is right now. They've currently got 12.21%, 62.4 million shares, but that is an additional couple shares. Now, you can't just swift one way or the other. What I would do is take the median between those two data points, and that's likely going to give you the holistic picture on maybe what the overall trend is. But what I found more interesting is the squeeze score. He has actually tweeted this out a couple of times, and I think it's a pretty fascinating thing to talk about. So let me just find this here really quick. He's got a 1 to 100 squeeze score on AMC, GameStop, and some other stocks out there, right? Both GM and AMC have a 10 out of 10 short squeeze risk score. And he actually, let me just find this really quick. Okay, here it is. Squeeze score for AMC, GameStop, and Clove is 100 out of 100. We changed the metric from a 1 to 10 to 100, a 1 to 100. Tesla is a 23 out of 100 to put this in perspective. Now, if you're to look at Tesla right now, let's just look at the overall short interest on Tesla. Anything over 3, 4, 5% is pretty significant information, right? That's a pretty decent squeeze, possibility. And their short interest as it is right now is sitting at 4.81%. Now, if they're at a 23 out of 100 squeeze score, meaning they could possibly squeeze right now, and AMC is at 100, think about that. Think about the weight that carries. That's pretty freaking massive. So don't get distracted. Remember what's happening right now and be wary of the people out there who are trying to sway you of your conviction. People don't have to think you're right. You just have to be fucking right. That's as simple as it gets. And I think that the millions of apes out there betting on AMC stock going up, squeezing the crap out of these freaking lemon pepper attendees are right. And I'm betting on it. 100% am. Now, what do you got cooking up on AMC right now? I want to talk about the technicals. In my video last night, as I mentioned, I hinted at the fact that you are very likely going to see some sort of downside for that $43 level of support. Now, what we're waiting on, which could very, potentially happen, is a bounce off of that $43 level of support. That was actually what I anticipated and predicted in yesterday's video. So we've got the first piece of that, right? We got that dip down to $43. Now what you're waiting on is a hard break over this descending level of resistance, right? Now, how am I coming up with this? Why do I think this is a significant level? Why do I think this is going to be a pivotal point to get this back in bullish momentum? It's for this simple reason, right? You've got a huge pennant formation right here with a descending level of resistance. You look for at least 3 touch points for any signified level of support or resistance. You get them. 1, 2, 3, 4, 5, 6 different touch points right here, right? And on the ascending side, you've got the same. You've got more than 3 touch points. It broke for the downside on this pennant formation, meaning that it's going to look for that next level of support, right? And you've got it right here. You look for those touch points. 1, 2, 3, 4, 5. And it broke, down to here. It had a false breakdown underneath that $43 level of support, but it held that line and it's starting to get that little bit of a bounce back up. It just needs to continue to follow through with that overall bounce off that $43 level of support to get this break over this descending level of resistance, which if it happened in the after hours would be about $48. If it were to happen tomorrow, it would be about $47. So a hard break over that descending level of resistance to me is going to bring us that $50 range, which will bring us to that next even Steven round number of $55, 60, 65, 70, and it's going to come with dips and rips and valleys and the shadow realm and the whole 9 yards, my friends. It's going to come with some freaking friction. Friction comes with any good story, and I am sitting through it smiling because through friction comes freaking toughness. I'll tell you this. There's something that was passed along to me, from a mentor back when I was in college that I think is something really wise, and I'll never forget it. And it was this: people learn through traumatic experiences. And if this is something that's emotionally difficult for you, right? You're coming out every single day feeling like you got beat up. You went through freaking 10 rounds, right? You're getting stronger. You just are. Now, don't get that confused with making bad financial decisions. You need to mitigate your risk and exposure and make sure that you're comfortable sleeping at night with the amount of money that you've got invested in anything, AMC stock included, right? Because there's always risk on the table. Nothing in the stock market's guaranteed. But as far as good setups go, AMC has got it made, right? And every single day that you come out the other end, still alive, still breathing, still have that roof over your head, still freaking feeding your mouth, right? You're coming out better. You just are. I can speak for myself alone, and I know that I've come out this last 6 months as a stronger individual, a stronger person, a more intelligent person, a more well-grounded, well-rounded person because of everything that I've learned and have gone through with AMC stock. I just know for a fact that the education and experience that has come out of the last 6 months with this stock is going to far outweigh anything else that I've done in the last 1 year, 2 years, 3 years, 5 years, whatever it may be, right? You can't replace experience, and you are getting that every single day with AMC stock, and that's what I've got for this video. So you know what it is, my friends. This is not a dead cat, baby. It is never gonna be a dead cat. We've still got more on the table. I'll catch you on the next one. Blah, blah, blah. I don't know how to drop a like and subscribe. Whatever you want to do, my friends. Much love and peace.